Chapter 19, Additional Tax and Penalties. The following forms and publications were used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The objectives of this lesson is for the student to recognize when alternative minimum tax needs to be figured. Students will understand when and why penalties may or have been assessed. Students will know the exceptions for filing a return late. Students will distinguish the difference between civil and criminal penalties. If the taxpayer does not file their return by the due date, including extensions, they may have to pay a failure to file penalty. The penalty is 5% of the tax not paid by the due date for each month, or part of a month that the return is late. This penalty cannot be more than 25% of the tax, but it is reduced by the failure to pay penalty, discussed next, for any month both penalties apply. However, if the return is more than 60 days late, the penalty will not be less than $100 or 100% of the tax balance, whichever is less. The taxpayer will not have to pay the penalty if they can show reasonable cause for not filing on time, and reasonable is defined by the IRS. The taxpayer may have to pay a penalty of 1.5% of their unpaid taxes for each month or part of a month after the due date that the tax is not paid. This penalty cannot be more than 25% of their unpaid tax. The taxpayer will not have to pay the penalty if they can show good reason or reasonable cause for not paying their tax on time, again defined by the IRS. There are also penalties for frivolous returns. The taxpayer may have to pay a penalty of $500 if they file a return that does not include enough information to figure the correct tax, or that shows an incorrect tax amount due. 2. A frivolous position on the taxpayer part, or a desire to delay or interfere with the administration of federal income tax laws. Again, frivolous is defined by the IRS. And of course, this penalty is in addition to any other penalty provided by law. There are a variety of other penalties, accuracy-related penalties. The amount of the penalty is determined by the IRS and depends to what extent they believe the accuracy is done frivolously, perhaps fictitious information, or if it's just not done correctly, math errors or whatnot that results in an inaccurate amount of tax or deductions, or which affects, of course, refunds. Negligence is the issue of I failed to add information, but I didn't necessarily do it on purpose. So there's very important to understand definitions from the IRS, as opposed to disregard, where you just chose not to include it. An absolute disregard for the laws and the rules. There's another definition, and important to look at, what is a substantial understatement of income tax. If it is discovered that you had a large amount of money, income, that was not reported, and again, what constitutes a large amount or a substantial understatement of income tax is defined by the IRS. Also, information reporting penalties. If you add information that's false or do not enter information that is needed, there are penalties for that as well as failure to furnish correct payee statements. If you are filling out a handwritten W-2 and submitting it to indicate there was a large amount of federal tax withheld to increase your refund, these are issues where there may be additional penalties. Also, there's a penalty for failure to supply Social Security number. If the taxpayer does not include their Social Security number or the Social Security number of another person where required on a return, statement, or other document, they will be subject to a penalty of $50 for each failure. They may also be subject to the penalty of $50 if they do not give their Social Security number to another person when it is required on a return, statement, or other document. A variety of types of penalties. Predominantly what you deal with with the IRS are civil penalties. But if there is considerable disregard and frivolous and fraudulent, again, further definition is necessary, criminal penalties. There are many people who want to think that it is unconstitutional to pay tax, and many of them are in jail with that same security of knowledge that it's unconstitutional to pay tax, and yet now are spending time in jail being paid for their meals by our taxes. Also, another type of penalty, underpayment of penalties. And if you choose to underpay your tax as well as any underpaid penalties, there of course is going to result in additional penalties, and of course paying or receiving interest. Now, we discussed in a previous chapter alternative minimum tax, but it is important to make another note of it here. We're not going into great detail at this point, and if you do run across alternative minimum tax, it is important to do additional research. But it is separately figured tax that eliminates many deductions and credits. The idea is to balance the amount of tax paid for someone who makes excess amount of money and could take advantage of excess amount of deductions to reduce his share of tax. And it is apparently important a tax attempted to ensure that anyone who benefits from tax credits and special deductions pays at least a minimum amount of tax. It does increase tax liability, and of course it impacts capital gains and certain dividends. Nanny tax, we discussed this, applies to household workers. If your wages are $1,500 or more, and actually that's increased to $1,800 now, then you would have to pay Social Security and Medicare tax and wages from which federal tax was withheld should the nanny, in this case, request it. That concludes Chapter 19. Please do the review questions and the TPAs online. Read Chapter 20 and certainly be studying for your final. Thank you.